John, good to see you. I'm glad we have a chance to talk through the recent market volatility. I have a lot of questions. Concerns about a cooling U.S. economy led to a market rout in early August, with the Dow down as many as 1,100 points. The market has since rebounded, and I want you to respond to this recent volatility as we take a look at the S&P's performance for the past month.
Yeah, and we had a major drop, right? That 1 week was brutal.
Right.
The bell of the whole market, Nvidia was tanking, and a lot of people were saying, that the ball has finally dropped. The market crashes upon us, and then all of a sudden things rebounded. And sometimes that's what the market just does. You have a pullback, and then it goes back up. So the important thing is, like we always say, is you can't panic. And it's easier said than done. It's even hard for professionals like myself, Aaron, right? We don't want to lose our clients' money. You certainly don't want to lose your own money, but you have to look at the long term, and you have to have a plan to where you can control your emotions. And that's what we try to do with our clients, is we try to show them through data, this is what you can expect in good weeks, good months, good years, and this is what you can expect in bad times. And
Right.
that really helps people out, having that plan.
Right. And we're going to talk more about the importance of having a plan. I have another question, though, about this recent kind of tiny correction. Was this related to the concentration risk that we've talked about before, where 82% of the S&P's movements are due to only 10 stocks?
Yeah, and look at there. One of them is Nvidia that I
Yep.
mentioned, which has been a phenomenal stock. But we've really been seeing this for about the last 5 years. We've had Amazon, Google, Meta, Nvidia. They've all been lifting the stock market. And just like I said, just like with gravity, any investment is going to go up, 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 and then it's going to go down. And it's hard to believe that sometimes a pullback is actually healthy for the market. So, you have to understand that, the S&P 500, while it's 500 of the largest companies, that over concentration, those 10, is going to sway the S&P 500.
I'm glad you brought that up. The S&P is not a diversified portfolio, but how did a diversified portfolio weather this recent volatility?
Well, we love to see those three numbers. They're thrown in our face: the NASDAQ, the S&P 500, or the Dow. But people have to understand that if you are truly academically diversified, that you're not going to get all the ups of the S&P 500, but in reality, you don't want that. You want diversification to spread your risk away from those 10 big companies. So, people who had diversified portfolios, while they may not have been doing as well as the S&P 500, when that S&P 500 pulled back down, their diversification helped smooth out the losses of the S&P 500. So diversification, and BlackRock does a great piece, and so does Invesco, that while it doesn't always feel good, that a long-term investment strategy will actually have more success being diversified than going for that home run of the S&P 500. And,
Right.
Aaron, I don't care how smart or disciplined you are, we're all humans. And the problem is, when those big time headlines hit, we get tunnel vision. And we
Absolutely.
start focusing in on that small timeline
Mhm.
versus the overall plan that we have, that 360-degree, 10,000-foot view. And that's what you really have to focus on these periods of time. Understand what the market is doing and why it's doing it, not just what the media is telling you.
I'm really glad you brought that up, because when all of this was happening, John, I just happened to go to Google that day, and I was typing in "should I?" and the first option on that dropdown you can see is "sell my stocks now." So clearly people were feeling anxious. What do we need to keep in mind when we hear these headlines?
Well, you have to keep in mind that, do you have a plan? That's the big thing. Do you have a plan? Do you understand? If you're a do-it-yourselfer, you have a lot of data you have to truly understand if you want to maximize your portfolio. Do you understand why that stock pulled back? Do you understand why the indexes are pulling back? Or are we now entering a downward trend. Ultimately, though, you have to understand that your investments will perform a certain way in up markets and down markets. And you have to have a gauge on what to expect, because when it does happen, and it's not if, but when, if you know what to expect, you're going to be able to get through that down period with a lot more sense and a lot more or a lot less emotion.
Mm-hmm. And just to remind everybody watching, you are a constant student. You were recently invited into a very highly specialized group. Tell us more about that and what you have been discussing in that group recently.
Yes, so my clients will tell you I am never satisfied. I am always looking ways to improve as an advisor and enrich my clients' lives. And right around this time, I was invited into an investment mastermind group where we look at very advanced data and we look at charts, not headlines. It's about the data, Aaron. It's not about the emotional headlines. So I am going to pull up a chart here and I'm going to tell you what we are now seeing here in the last week of August, kind of going forward. Number one, there's a lot of institutional investors, and right now they're just trying to see what price is going to do here at the end of August, whether it's going to move beyond this point right here and continue going higher or not, and then start coming down. But right now, as frustrating as it sounds, we don't have a clear direction. However, there are two important trends we must realize. Number one, we're approaching September. Aaron, last September we did a video on how bad September is. 51%, I believe, of down markets happen in September.
Mm-hmm.
So it's notably one of the worst markets, it's notably the worst month in the market. Now, on top of that, we have to understand that market cycles, market trends, whether positive or negative, tend to last 18 to 24 months. Well, guess what, Aaron? We're in month 22 of this positive cycle.
Wow.
So not only are we in September, but we are in what we call the kill zone, right? We are near that 24th month and we're later in the trend. So if you're one of these people that's just arriving to the party or you're aggressive, you could get in this entry point, but you have to realize that you may get a little bit more growth, but then you could start dropping. And we had the behavioral finance charts in the past where market highs lead to euphoria. This is another area that is of concern with the kill zone. So if you're aggressive, yeah, you could stay in the market a little bit longer. If you're conservative, knowing that where we are in the trend, knowing that it's September, you may want to reallocate part of your money to fixed income just to offer that protection. And I want to make clear, folks, this is not market timing. We are not timing the market. We are just talking about trends, which are great predictors, and we are trying to navigate the ups and downs of those trends. So that's what the data is telling us. And right now, you've got a lot of retail investors, right? Not the small guys, the do-it-yourselfers, that may get their lunch handed to them. And when it comes to big money, right now, a lot of the institutions are sitting on the sidelines. They're just kind of sitting here. And based on the information that came out last week, we may possibly see some action going into this week. And hopefully by next week, we have a clearer direction of where the markets are going to be. But right now, we just want to be cautious.
Mm-hmm. So when you have that data that informs your plan, you don't have to go to Google the day of these scary headlines and then sell everything and miss out on those rallies. This is so important. John, just to remind everybody then to keep tracking your videos post-September, pre-September, to make sure that we all know what's going on as you navigate those charts and that data. Again, thanks for those insights. And of course, to point everybody back to your YouTube channel for many, many great videos and resources. What else do we need to know?
Go to our website, www.gosecurus.com. While on the website, you can look up all of our past videos. Last September's video, when we were pretty much spot on with September. And you can also listen to some of our podcasts, which go way beyond investing with my good friend Tommy. And while you're on the website, you can visit the Contact Us tab, and you can schedule a 20-minute phone call where we'll answer any general questions you may have off this video, or you can schedule a complimentary vision and clarity consultation. And Aaron, if you just like doing things the old-fashioned way, give us a call at the office on our new office number at our new location also, 858-758-9889, and they will get you on my schedule.
Great. John, thank you.
Thank you, Aaron.